Hello friends, in this part of the video, continuing to budget constraint, we'll be learning about factors affecting the budget line. In the last video, we have already seen that the budget line of a consumer can change due to two major factors. The first being change in income of the consumer, and the second being change in price of either commodity. We have also seen that if there is change in income, the budget line shifts parallelly. Whereas if there is a change in price of any good, the budget line will shift rightward or leftward on respective axis. On which that commodity whose price has changed has been represented. Now, what are the factors which causes change in income of the consumer, and what are the factors which causes change in price of any goods? So if these factors affect the budget line, the factors affecting income and the price of goods will also change the budget line. So in this video, we are going to see the impact of taxes and subsidies, lump sum tax, lump sum subsidy, and rationing on the budget line of the consumer. Now let's see the effect of taxes on the budget line of the consumer. Let's say a tax of amount T1 has been imposed on goods X1. Whose price is P1. Now, tax is the amount paid to the government on purchase of any goods, like goods which we use. So when the amount of tax T1 is being paid to the government for consumption of goods X1 whose price is P1, the price is relatively changing. So we can say that now the price becomes P1 plus T1. So we have the price of X1 as P1 plus T1. This is because a tax T1 is being paid on consumption of goods X1. So relatively the price of goods X1 is increasing. If there is increase in price, as we have seen, the budget line will shift inward on that axis. So let us see how the budget line is going to change. In this graph, let's take goods X1 on the x-axis and goods Y1 on the y-axis. We have the price of good Y1 as P2, and we have taken the price of goods X1 originally as P1, which has changed to P1 plus T1. Let's say that BL is the original budget line of the consumer. At point L, the intercept will be income M of the consumer by price of X1, that is P1. And at point B on the y-axis, the intercept would be M income by price of Y1, that is P2. Now the slope of the budget line BL will be given by ratio of prices, so minus P1 by P2. Now let's see how the budget line is going to change. Now the new budget line of the consumer is BL1. The new budget line of consumer has shifted leftward on the x-axis from point L to L1. At point L1, the intercept would be given by M money income of the consumer divided by price of X1, that has changed from P1 to P1 plus T1. So P1 plus T1 here. The intercept on the y-axis remains same because there is no change in income of the consumer or the price of Y1 goods. Now let's see what will be the effect on the slope of BL1 line. So the slope of the budget line BL1 will change from minus P1 by P2 to minus P1 plus T1 by P2. This is because the price of X1 commodity has changed from P1 to minus P1 plus T1. So that's why there is a change in the slope of budget line BL1. Now here we can see that the budget line shifts to BL1 inward. Here we can also say that the area under the budget line has decreased because the area of triangle BOL is more than the area of triangle BOL1. So we can say that the affordable consumption bundles which lied in the region of BL1L cannot be afforded by the consumer now. So area BL1L is the tax that is being paid by the consumer to the government. Now again here we can say that the slope becomes steeper. With respect to the slope of BL line, which was flatter than BL1, the new budget line of the consumer. So in this way we can say that taxes reduces the affordability of the consumer because taxes increases the price of the commodity on which it is imposed. Here we can also say that since a tax T1 has been imposed on goods X1, it has increased the price of X1 commodity from P1 to P1 plus T1. So it has a negative effect on the consumer because now the consumer can afford less amount of goods X1. Now let us see what will happen if a subsidy is given instead of imposition of tax on X1 commodity. So before understanding the effect of subsidy, let's see that what do we mean by subsidy. Subsidy is the amount paid by the government on purchase of per unit of goods. So let's say that here we are taking goods X1, so goods X1. Now suppose that subsidy S is given on X1 commodity. Since a subsidy is being given on X1 commodity, we can say that the price of X1 commodity falls. Because now a part of the price of X1 commodity S is being paid by the government instead of the consumer. So in this case, we will see that the budget line becomes flatter, and now the area under the budget line increases than what it was earlier. So let us see it with the help of a graph. In this graph, we will take goods X1 on the x-axis and goods Y1 on the y-axis. Now original budget line has been shown by BL, and the intercept at point L is M by P1 and intercept at point B is M by P2, because the price of Y1 goods is P2. Now a subsidy is being given on X1 commodity, and that subsidy is S. So we have already seen that if the subsidy is being given, the price of X1, which was originally P1, changes to P1 minus the amount of subsidy, that is P1 minus S. So in this case, the budget line being pivoted at the y-axis will shift outward on the x-axis. Let's see how. Let's say the new budget line is BL1. So here BL1, the outer line is the new budget line of the consumer. At point L1 on the x-axis, the intercept will be given by M by price of X1, which has changed from P1 to P1 minus S. So in this way, the intercept on the x-axis has changed, remaining same at the y-axis, because neither the income and nor the price of the commodity Y1 is changing. Now looking at the slope of the lines, budget line BL has the slope of minus P1 by P2, whereas the new budget line has a slope of P1 minus S by P2. Slope is always negative, because with respect to other commodity, the first commodity decreases. So if the person is consuming more of X1, he has to decrease the consumption of Y1 goods. So there is an inverse relationship to show that we take the negative slope. Now in this curve, we can also say that the area of triangle BOL1 is more than area of triangle BOL. Hence we can say that the affordable consumption bundle has increased. The consumer can now afford the consumption bundles lying in the area BLL1. So the area of triangle BLL1, which was earlier non-affordable by the consumer, can now be afforded. So we can say that this subsidy decreases the price of the commodity and consumer becomes better off. So earlier consumer could purchase less than what he was given at price P1, but now he can afford more than the point L on x-axis of commodity X. So here we can also say that since OL1 is greater than OL, the amount of goods X1 increases. So subsidy has a positive impact on the consumer, as we have seen here. Now let us see how the income will change due to the lump sum tax imposed on the consumer. In this way, we have seen that taxes and subsidies are affecting the price of the goods. But when we will look at the lump sum tax and lump sum subsidy, we can understand that lump sum tax and lump sum subsidy changes the income of the consumer. So let's have a look at that. Lump sum tax. First thing to note here is what do we mean by lump sum tax. Then we'll see that how the income of the consumer is changing due to lump sum tax. So lump sum tax is basically amount of money taken by the government regardless of consumer behavior. So in this, the amount of money itself is taken from the consumer. So if the consumer is giving some amount of money from his income, we can say that in this case the income reduces. If there is reduction in income of the consumer, we can say that the budget line shifts parallelly inward. There will be a parallel shift inward with respect to the original budget line of the consumer, because there is a change in income of the consumer, and that change is a negative change, reduction in income of the consumer. Let's see how it happens. We assume that lump sum tax of LT amount has been imposed. Let's have goods X1 on the x-axis and goods Y1 on the y-axis. The price of goods X1 be P1 and that of Y1 be P2. The intercept of the original budget line BL will be given by M by P1 on the x-axis and M by P2 on the y-axis. Since there is decrease in income of the consumer due to imposition of lump sum tax, we can say that the budget line will shift parallelly inward. Here we have the new budget line B1 L1. Now B1 L1 is parallel to BL, the original budget line. The intercept on B1 L1 changes, and at point L1 the intercept is given by the income M minus LT, lump sum tax, divided by P1. Whereas on the y-axis it will be given by M minus LT, lump sum tax, reducing the lump sum tax from the income of the consumer by price of second commodity P2. Now the slope of the budget line on both the lines remains same as minus P1 by P2, because the price of both the goods remain constant as P1 and P2 for X1 and Y1 respectively. So we can say that there is no change in the slope. Slope remains same. Intercept changes. Now from the intercept we can make out that there is a downward movement on the y-axis and leftward movement on the x-axis. So the affordable consumption bundle of the consumer decreases. Here we have already seen the consumer cannot afford the bundles lying in the area of BB1, L1L, because now the income of the consumer has decreased and he can purchase less than what he was earlier purchasing. So we have seen that taxes also have a negative impact on the consumer's affordable goods, and lump sum tax also has a negative impact on the consumer's affordable goods, because lump sum tax reduces the income of the consumer. Now let us see how will lump sum subsidy change the income of the consumer. Let's have a look at that. Lump sum subsidy, unlike lump sum tax, is money paid by the government or money given by the government for welfare of consumer. In certain cases, the government gives money to the consumer, to the people of the nation for their welfare. Now let us see how will the budget line of the consumer change if a lump sum subsidy of LS amount is given to the consumer. So here, let the income of the consumer be M. So now the new income of the consumer becomes M plus LS. So there is an increase in the income of the consumer from M to M plus LS, because this extra LS amount is being paid by the government to the consumer. So as we already know that the income effect shifts the budget line parallelly. Since there is an increase in income of the consumer, the budget line will shift parallelly towards its right hand side. Now in this graph, we denote goods X1 on the x-axis and Y1 on the y-axis. We will take the price of X1 as P1 and that of Y1 as P2 and denote the original budget line of the consumer as BL. In this case, we can say that the intercept at point L will be M by P1 and the intercept at point B will be M by P2. Now the budget line will shift rightward parallelly. Let's see how. Here the budget line of the consumer has changed from BL to B1 L1. Now the budget line B1 L1 has the intercept of M plus LS. Lump sum subsidy is LS divided by P1 on the x-axis at point L1 and M plus LS, the new income of the consumer due to lump sum subsidy being given to him, by P2, the price of second commodity, which is same as it was earlier for the budget line BL. Now here we can say that the slope of the budget line is given by ratio of the prices. So we have the slope of B1 L1 as minus P1 by P2 as same as the slope of the budget line BL, which was also given by P1 by P2. Now the slope does not changes in this case. This is because lump sum subsidy has an change in income effect on the budget line of the consumer, and the budget line changes due to income change, not price change. Since there is no price change, the slope remains same. But the area under the budget line has increased because the area of triangle BOL is less than the area of triangle B1OL1. Now we can say that consumer can afford more goods. The consumption bundle of consumer increases in this case. Here we can also say that consumer is better than what he was earlier. So this is the effect of lump sum subsidy on the consumer. Now let us see how rationing will change the budget line of the consumer and how the consumer is going to react in that case. Before understanding the effect of rationing, let's see what do we mean by the term rationing. Rationing means level of consumption of some goods is fixed to be not more than the quantity given. In this example, we will fix the level of consumption of commodity X1. So let's say goods X1 has been rationed to the point X1 bar. So in this case, the consumer cannot consume more than X1 bar of goods X1. Now, in this case, the income of the consumer is M and the price of X1 is P1. And price of goods X2 is P2. So neither the income nor the price of the commodity changes. Only goods X1 has been rationed. So let's see how the budget line of the consumer is going to react. In this graph, we will take goods X1 on the x-axis and we will take goods X2 on the y-axis. We have the budget line given as BL with the intercept at point L as M by P1 and the intercept on the y-axis as M by P2. Let's say goods X1 has been rationed at point X1 bar. So the consumer cannot purchase more than X1 bar of the goods X1. Let's see how the consumer's budget line will change. Here we have goods X1 fixed at X1 bar and at point A we have the consumer's budget line lopped off or moved parallel to the y-axis instead of moving towards L on the x-axis. So we can say that goods X1 is rationed, hence no more than X1 bar could be consumed by a consumer. It is like an old budget line lopped off. This lopped off piece consists of all the consumption bundle that the consumer can afford. So here these bundles are affordable consumption bundle. But in this case, we have X1 more than X1 bar. Since the consumer cannot consume more than X1 bar, these goods cannot be purchased. In this case, even the slope of the budget line EBA is minus P1 by P2. Here, the slope of the budget line AX bar tends to infinity, and even here the slope of the budget line AL is minus P1 by P2 because it is the part of the original budget line of the consumer. So in this case, what we can say that in spite of affordable bundles, the consumer cannot purchase the area under the triangle AX1 bar L. So the affordable bundles which has been permitted lie in the area BAX1 bar O. So all these bundles lying in the area BAX1 bar O can be purchased or consumed by the consumer, but in spite of being afforded, the consumption bundles lying under the triangle AX1 bar L cannot be purchased by the consumer. So in this way, rationing has also limited the consumption bundles of the consumer. We have seen the impact of taxes, subsidy, lump sum tax, lump sum subsidy and rationing on the consumer's budget line. In the next video, we will look at the preferences of the consumer, how the consumer prefers one good to the another, or how he is indifferent between the consumption of two goods, or we will see in what cases can we talk of the preferences of the consumer. We will continue with the indifference curve in the next video. Till then, thank you.